What's up, guys? Welcome back to IPDAX Foundations. And today we're going to be going over reclaimed order blocks. All right, so here's the logic behind the reclaimed order blocks. So as price is going towards its desired support or resistance levels, or in our case, it would be bullish or bearish higher time frame PD arrays, because as we should know by now, those are the only things that are really supporting and resisting price, are those PD arrays. And as price is making its way towards those levels, the market makers will seek to price in their positions. Now, while the market makers are hedging, we will see short-term rallies or declines. We need to understand that the motives behind these short-term rallies and declines are just for market makers to price in their orders. And their intention isn't to take price higher or lower prior to hitting the array. So let me just draw in what I mean real quick. All right, so let's say that we have the sell side of the curve here, and then we have the buy side of the curve right here. And then let's also imagine that this is our PD array. So let me just move this over here. All right, so if we were to zoom in on the sell side of the curve, it would look something like this. And then price would make its way towards that array. And then if we were to zoom in on the buy side of the curve, price would be doing something like this. Now, in that move, price is going up and it's going down. It's going up, it's going down, right? We know that the order flow on this side of the curve is overall bearish, but in order to reach that level, it needs to go up and down, up and down. And then while we're going towards that array, we're going to be putting in these bearish order blocks right here, right here, right here, and right here, and also right here. And we also see these minor short-term rallies to go higher, right? Price goes higher even when we're on the sell side of the curve. Now, during these times right here, when price is going higher, these short-term highs that it's creating, that's when the market makers are hedging in their positions. So they already know that they want to take price higher after hitting this array. After they hit this array, their objective is to take price higher. So what they do is they'll price in their orders. Now you have to remember that these market makers, they're dealing with billions and trillions of dollars worth of liquidity, so they can't all just put all their orders in at this PD array right here. So what they need to do is, let's say that they want to price in around 100 million. So here they would put in maybe 25 million there, put in 25 million here, and then the rest, the other 25, and then the rest of their positions they would put on over here. And then, after they have the remainder of their positions, they'll take price higher. And that also builds into the idea of those short-term lows. So if you guys remember, we talked about how we don't trust these short-term lows that go into these PD arrays, because those short-term lows, or those short-term highs that hover below those PD arrays, are just short-term lows, and that they're going to get liquidated. Now, that's also one of the logic behind why they get liquidated, is because the market makers are just hedging in their orders. Even though there's all this selling, they're hedging in their buys early, they're scaling in their positions, and that's why we expect one more drive lower for them to complete their pricing in of their orders, and then we see price go higher. So that's what I mean when I say all of this stuff over here. All right, so with that being said, let's take a look at the next slide. So the bullish reclaimed order block. So the bullish reclaimed block is a bullish order block from the sell side of the curve. So now if I were to go back to my drawing tool, we have the sell side of the curve here. We have our array right down here. And then we have the buy side of the curve right here. And then, as I mentioned earlier, This down candle prior to this up move right here is your bearish order block, or your bullish order block, sorry, from the sell side of the curve. And then once price makes its way over here, we can anticipate that this candle will get reclaimed, because remember, the market makers were hedging in their positions here. So, maybe they'll come down here back into this order block level and then mitigate those positions or stack on more buy positions and then take it higher. So that's the logic behind why price comes back down to those bullish reclaimed order blocks. But if you just want the definition of what a bullish reclaimed order block is, it's just that last down close candle or that order block that leads to a little rally on the sell side of the curve. And then once we enter the buy side of the curve, price will come back down, mitigate that level, and then go higher. Now, similarly, we have this order block right here, and then we see that that leads to a price run higher. And then, as I already mentioned, this is an area where the market makers were scaling in their positions. So once price goes to the buy side of the curve, it'll seek to want to come back down here, and then the market makers will mitigate their positions or stack on more positions there, and then price goes higher. So just in theory, that's what a bullish reclaimed order block is. Now let's take a look at an example. All right, so here we can see that we have this original consolidation right there, and then we're clearly on the sell side of the curve right here. And then we see that we have transitioned over to the buy side of the curve right here. And then this is that daily fair value gap right here. So that's this gray box right here. And then we come lower, and then we see that price had this little order block right here prior to hitting this array. And then this order block caused a little push higher. Now, we know that these short-term lows that hover above the arrays are typically liquidity. So us at IPDAX, we wouldn't be trusting this move. We wouldn't be looking at this to go higher from, because we understand that price still needs to, really mitigate into this fair value gap. And also, now that we understand kind of the logic behind what's happening and how the market makers are just stacking on positions here, we wait for price to really mitigate that level. And then what happens is, price transitions over, it goes higher, and then we see that price respects that level right here, right? This bullish order block from the sell side of the curve is where the market makers take price. They mitigate their orders or, accumulate more long positions, and then, they send price higher from there. And it's not random that price stops here and then goes higher. Now, one other thing that I kind of want to point out here is, yes, this is also a reclaimed order block, but notice how that also lines up with this fair value gap as well. So there's a blending of confluences there as well. And if you guys remember from the previous lectures, we talked about how these overlapping PD arrays kind of have a higher confluence in price. So we have this reclaimed order block and this fair value gap, and then price comes down here, allows the market makers and smart money to accumulate more long positions, and then price goes higher. All right, so now let's take a look at the bearish example, or the bullish example, I mean. Okay, this should be bearish, so just ignore that. But so this is the bearish reclaim block, and the bearish reclaim block is just a bearish order block from the buy side of the curve. So if we go over the logic one more time, we have the flip side. We have price going up. This is the buy side of the curve. It hits that array, and then now price is coming down lower. And then consequently, right here at these levels, we have bearish order blocks right here, right? These up close candles prior to down moves right here and right here. And then these order blocks cause short-term declines in price. And then what happens is when we get to the sell side of the curve after hitting our array, price will come lower. And then we know that the market makers were initially hedging in or pricing in their short orders at these levels right here. So price comes back down and then price goes up, mitigates those levels, reclaims those order blocks, and then goes lower. Similarly, order block right here, price comes back up, maybe allows smart money to accumulate more short orders there, at areas where they had previous selling, and then we see price go lower. So that's the logic behind these bearish reclaimed blocks. Now let's take a look at a live price example of it. So this picture right here, I took straight from ICT's video, but let's study the logic behind what's happening here. So right here, we're clearly on the sell side of the curve. And then over here, we're clearly on the buy side. Oh, whoops. It should be the other way around. Here, we're on the buy side. And then on this side, we're on the sell side of the curve. And then we see that this order block right here caused some selling to happen on the buy side of the curve. And then similarly, we see that this order block also caused selling right there. Now, once we fully transition to the sell side of the curve, we see that price comes back up and then it mitigates this level right here and then goes lower. And then after it goes lower, price re-references this right here, allows smart money to accumulate more short orders, and then it goes lower. So that's what a bearish reclaimed order block would look like in live price action. But I also want to point out one more thing. So notice at this level right here, we have something else. And maybe some of you guys already see it, but we have this fair value gap right here. And we also have, let's make this a different color, high, higher high, and then that low in between, which makes this a breaker. So you can see right here that we have a blending of 3 different bearish PD arrays, and then that kind of serves as a brick wall for price to, to really reject from, and then price goes lower. So that's just an example that I wanted to show you guys how having multiple PD arrays in one region of price can kind of serve as a confluence that price is going to go in a certain direction. But yeah, so reclaimed order blocks are pretty simple. So it's going to be a pretty short video, but hopefully you guys found this one insightful. And then, be sure to do your own homework and back test. And then I'll talk to you guys in the next one. Cheers.